Moon Platoon, I am glad to see you here because we have to push through all of the catalysts that are opened ourselves up to this week. We not only have Gary Gensler coming in as the SEC head, he helped out in the 2008 financial crisis and he's on our side. Let's see if he can actually mobilize the SEC and get something done. We also have Ryan Cohen coming in as the chairperson. We have OCC 801. We have the new CEO trying to be found by GME. However, what are we actually looking at? What is the most important pieces of the puzzle? Because without them, we would not be able to count on the squeeze. Well, actually, we are going to cover why we and our whales are waiting for the DTC OCC regulations to initiate the squeeze, not the recall, right? We've talked about that share recall. It was confirmed by Vanguard yesterday, and now that's something else that we need to be able to look at. Miles Dodd, I'll look at your super in just a second, but as a reminder, guys, watching to the end of the video helps the algorithm. Clicking that like button also helps us defeat it. And if you guys have an inkling to want to join us for the Moon Platoon 100,000 celebration, where we're all going to be chilling in the islands, handing out some cool prizes on 100,000, I will imagine that you guys want to be there. And there are some interesting milestones coming up at 80,000, 85,000. Let's get that number up. Appreciate you guys jumping on. And now let's actually break it down with this 004 and 801 for Apes. For Apes in particular, it's kind of like one of those 4 men body soaps here, but yeah, it's for Apes in particular. Some of you have requested C-Digs to try and give you guys a quick breakdown, so let's use this to give us a little bit of background on exactly what are we looking at with 004, and C-Digs even goes on further and says why the proposed rule change is important and possible shell games. So this video is going to be heady. It's going to have lots of entertainment and education. So let's get started here. Right, let's discuss the SR-DTCs 2021 004 and 801. Then we'll discuss DTC 005 and OCC 004. Right, are you confused yet? Let's try to break it down just real quick. DTC is the non-governmental governing body of the cartel known as the DTC. Right, the DTC has multiple arms. They have OCC, they have NSCC, they have a lot of different sister companies or sister organizing bodies. For Apes, Citadel Farms belongs to Banana Farmer Association. Banana Farmer Association create banana backup crop that every farmer contributes to. If farmer crop goes bad, farmer can take from banana backup crops so farmer survive the season and farm next year. Very similar to being able to be the purse string for the purse string, right? You're looking at someone who needs to be the adult in the room when there's a lot of money flying around and sometimes the incentives don't align. You need a one person with a lot of liquidity, and that's the DTC. Citadel Farms wants more banana. Citadel Farms wants more banana plants for humans and burn down field of wild banana plants where apes eat. Apes not happy and attack Citadel Farms and take their banana crop and eat every last banana. Now Citadel Farms cry to Banana Farmer Association to ask for backup crop. Banana Farmer Association, the DTC in this case, sees that Citadel Farms did this to themselves and now says that first they only give back bananas that you contributed. Then they will sell your equipment, tools, and lease your land and give you more banana. So given that is the ape explanation, essentially we are seeing that the originally internalized risk for the company organization known as the DTC is now going out and seeing the risky behavior that specific hedge funds like Citadel have been undertaking, and then turning the table and saying, well, actually, it seems like you are the one at risk. It's a time to tell exactly how to liquidate every last banana that you have. Also, all of your tools. For Homo erectus, right? We had an explanation for apes. Now let's talk about it for humans. 801 is not a margin call and doesn't allow OCC to margin call Citadel. This is an important note, right? It's the power stone, but not in the way that we think it automatically causes a margin call. It raises the target capital contribution to 25% for all members from the current variable rate, and it introduces a new minimum corporate contribution that DTC already has for its members. It has a different purpose in this game, and you need to understand why we are waiting for this, because it creates the conditions whereby why Citadel can be margin called without a lifeline. So it doesn't allow Citadel to snap. It just gives Citadel the power. And the power is being able to raise the capital contribution to 25%. Essentially, at the end of the day, this gives them less money. Let's actually think about this in this way. Let's say that we have that thermometer back again. Mr. Whiteboard, tell us something good. There's this thermometer that I'm gonna have to draw like a line here. And it bubbles up as the price of GME goes up. So this is GME price. And this is also on a dual axis here, the amount of money that Citadel has. And this is the mixed squeeze, right? Citadel's up here, maybe Melvin's down here. It's going to cause certain companies to go bankrupt before others default faster than others. However, Citadel has a certain amount of money, and just like how they bailed out Melvin, they can get an even bigger whale up here to give them some money, right? And this is how Citadel saved Melvin the first time. They just gave them more money. However, what this 801 rule does is actually takes Citadel's contributions in cash that they need for a certain piece of this, and then increases that so that increases that requirement so that Citadel falls on this thermometer. So now Citadel has a lower threshold for when it gets margin called. And that is the point, right? It doesn't allow that it doesn't allow an immediate, hey, suddenly we want to margin call you. It's that, well, we're gonna change how tall you need to be in order to ride the not getting margin called roller coaster. And if you're not riding that roller coaster, you're gonna be margin called because of the requirements that we put in place. So again here, snippet from page 19, establishing a minimum corporate contribution which OCC would apply after a defaulting clearing member's margin and clearing fund deposits by applying the minimum corporate contribution before charging the clearing fund. The proposed change helps protect non-defaulting clearing members from default losses of another clearing member, right? It's essentially trying to say, hey, you got yourself into this mess. Now I want to see some extra cash to make sure that you can get yourself out of this mess. Basically, pull yourself up right now. If you could pull yourself up, you could do it. If you're worried that you won't be able to pull yourself up later, do it right now. And if you can, if you don't have the extra liquidity that is necessary, right, that margin calls are all about how much actual assets, how much liquidity do you actually have, then that is a slippery slope to actually getting margin called. We're about 004. It does the same thing, but in the context of DTC. It subtly shifts the language of the underlying agreement to make it clear that the defaulting member's corporate contribution gets drawn down first, and assets from the defaulting member are used as collateral for liquidity. Prior to 004, they would have drawn the liquidity from all member contributions. And then finally, so we had a bit of a scare from 005, but we're going to talk about that in just a second. If you have ticker symbol suggestions, let me know. We do go bell to bell. If you guys haven't turned on notifications, that's the easiest way to not miss out on one of these live streams. The way they see it, the DTC and OCC are setting the stage to firewall some entity, might be Citadel, might be others, from taking the member insurance pool. Basically, with the change in verbiage with respect to 801 and 004, they are removing the lifeline from any defaulting member. It's the Banana Farmers Association saying that if you make a mistake, we're not giving you our bananas until your bananas are all used up. We may very well see a huge shift in GME in the coming days as the firewalls around Citadel are coming into place. OCC 801 firewalling Citadel options activity, DTC 004 firewalling Citadel securities activity. Without these lifelines, it will all be guarantees that Citadel will be completely wiped out in a default. The billion-dollar question is whether this is the condition for which the whale is waiting for to launch the final attack. And we're talking about the long whales on our side. And here's the kicker here. We're looking at AMC and GME actually go green for the day, which we'll track in just a second. See that double bottom on AMC, bullish signal. And since they track together, I think that maybe it's in the future would be safe to say that there is actually one signal leads to another, because AMC here, that double bottom, was very easy to read, basically concave directly up and reached up to the opening price here. And then GME followed in suit, even though its signal wasn't as strong of whether or not it was going to reverse. So the general idea is that you're looking at the boss stage where they have a bunch of lifelines, right? They have like tubes being connected to them with like mini bosses here. But these mini bosses, I'm gonna make them candy-shaped mini bosses. These mini bosses are cutting their ties with these new DTC regulations and saying, basically, all of your money is all of your money now. You used to have all of us on your side, boss, but now we don't work for you anymore because you lied to us because you were doing risky business. You're a risky uncle, and they're cutting their ties here. They saw lots of posts over the weekend hyping this, and the reality is that this change is not relevant for 005. So as a reminder, 005 was taken off of the website of the DTC for technical purposes, right? That there is no substantial like legal or regulation changes to the document. They just had to take it down because the formatting or whatever it is. 004 is probably the final nail. So they can summarize it for you, but you should really read it for yourself, right? I'm going to put this in the description so you guys can. In summary, 005 is not relevant to either GME, AMC, nor any other stock that is currently being shorted. It is purely a change to the member agreement to clarify a technical point of how DTC system manage accounting. So in terms of what C Diggs has to say, we have already invited him on the show, so he can summarize that more. However, 005, in other DD authors' opinion, and in my opinion, still serves as in a way to be able to prevent cyclical FTDs, and maybe that's just something that CDIGS doesn't either have visibility on or doesn't believe is a piece of manipulation that is happening. Oh, I'm not a cat says, please pet Meatball for me. He makes my day. Here you go, buddy. Big pet for Meatball. Okay, so that gives us a sense of 004 and its importance, and then the proposed rule change is important and possible shell games. So we have here just let's take a look at what the members of the DTC and OCC are. If you guys aren't aware, we don't just have Citadel here. We have a cross section. Apex Clearing, which actually is the guy behind a lot of the brokers you use, right? It's the guy behind I think Webull and some other companies. So this is one member of the OCC and the DTC. So we have check marks for everybody here. So we have Barclays and of course Citadel Clearing and Citadel Securities. So this is a small cross section of who is in there. Note who's in both of these organizations. Our favorite chumps, Robinhood and Citadel, Shark of Sharks, Goldman Sachs, Goldman's punching bag, Credit Suisse, and a big time GME long, Vanguard. Enter 004 and the OCC 2021-003. So that one is pending because once that one is passed, then 801 will will also go into effect. They're rehashing their earlier post, but it's important to frame why these two proposed amendments to existing rules are important to understand how the key players are positioning themselves at the moment. Before applying the participants' fund deposits of all other participants to cover any resulting loss, DTC will apply the corporate contribution. Similarly, the sentence directly above the definition of corporate contribution will be revised so that remove the words applying the participants' fund deposits and of all other participants. So this rule change is here in highlight, both of which OCC would exhaust before charging a loss to the clearing fund and the ETCP unvested balance. What you should see here is a common theme. DTC and OCC members are shifting how they pay out from their common member funds in the event of a member default. So we had a long conversation about how this with Austin about exactly how the family is changing how they deal with money, right? With risky uncles in the family, this is going to be a completely different way that we are going to close out specific counts. Essentially, the question we were asking is, why would you prepare for the death or the funeral of a family member if you didn't expect a family member to really die? So that's the question here, right? You wouldn't be able to say, in the event of my death, this is exactly what happens if you didn't expect that someone was going to die. So this goes on in finer detail, right? We know that CDIGS is someone with a lot of legal chops, as well as someone that we hope to have on the show soon. Conclusion: if you've followed the post and you've seen the following my train of thoughts, and the takeaway is that some point late 2020 through late January 2021, there was a sense that they wanted to margin call these shorts and get it over with. When DTC, OCC, and SEC realized how bad the situation was, they changed course to try and hold everything steady while they readied the medicine. So therefore, we've been trading sideways since March 16th, simply because any volatility could blow this all up before the firewalls are in place. Before the defaults are allowed to happen, these three key pieces need to be in place in orderly wind down. So we have 004, we have 003, which review window is 45 days from February 24th, and then we have 004 OCC, which is a 45-day window from March 31st. So once again, I think this gives you a comprehensive overview of the firewalls. The essentially, if you guys played Breath of the Wild, this is the guardians that you have to activate early, and we need to get them up in order for this boss battle to be all the more controlled. Because at the end of the day, this is not a government agency, but they still care about control. I really do appreciate you guys coming on with the adventure. Make sure to have already gotten your 2 free stocks from Webull. That really does help you start off with a little bit of capital to invest in whatever you want, right? And then you don't even have to keep those stocks. You can sell them, go do whatever you want with them. Do check out the link in the description for Webull, and check out the link in the description for $250 of free BlockFi. Supporting the show really does help. I appreciate every one of you who does, and I will see you in the money, either through the Patreon button down below or the join button next to the subscribe button. See you on the path to 100,000, and for now, but not for forever. Peace.